The IPO market just pulled off a Lazarus-like resurrection. After a $150 billion peak in 2021, it flatlined overnight. Now it's showing vital signs again, but with a twist that's got Wall Street buzzing.
Whoa, that's quite the roller coaster. What's driving this sudden revival?
Well, it's a fascinating confluence of factors. In 2024, US listings raised $32 billion. It's excluding special purpose acquisition companies. That's a 60% jump from 2023. But here's the kicker. It's not just about the quantity, it's the quality that's turning heads.
Quality over quantity. That's intriguing. Can you elaborate on what you mean by that?
Absolutely. 9 out of the 10 largest IPOs from 2024 ended the year trading above their listing price, with half achieving triple-digit gains. Reddit in particular was a standout performer. This success rate is crucial because it creates a positive feedback loop in investor psychology and helps establish realistic pricing benchmarks for future listings.
So it's like the market is recalibrating after the excesses of 2021. What caused that dramatic shift in the first place?
You've hit the nail on the head. The Federal Reserve's monetary policy was the primary architect of this transformation. The aggressive rate hike cycle that began in 2022 effectively froze the IPO market by fundamentally altering the valuation paradigm for growth companies.
Oh, I see. So higher interest rates made it harder to justify those sky-high valuations we saw in 2021.
Exactly. Higher interest rates disproportionately impact the present value of future cash flows. For companies valued primarily on their growth potential rather than current earnings, this created a double whammy: higher discount rates and reduced growth expectations. But here's where it gets interesting. The Fed's pivot in late 2024 with 3 consecutive rate cuts has begun to reshape this dynamic.
That's fascinating. So how are companies and investors adapting to this new environment?
Well, that's the million-dollar question, isn't it? We're seeing a significant shift in the types of companies going public. Instead of early-stage tech companies with compelling growth stories but uncertain paths to profitability, we're seeing a predominance of private equity-backed enterprises. Companies like Medline in medical devices and Genesis in software have already filed their paperwork.
Interesting. What sets these companies apart from the 2021 crop of IPOs?
These companies typically share 3 characteristics: established market positions, demonstrable cash flows, and clear paths to profitability. It's a far cry from the growth at any price paradigm we saw in 2021. The investment landscape has fundamentally shifted from 2021's market environment. During that period, investors displayed unprecedented optimism, readily funding and highly valuing companies that demonstrated modest performance or potential. This exuberance manifested in elevated valuations, easier access to capital, and a high tolerance for business models that weren't yet proven. Today's market represents a return to traditional fundamentals-based investing, where companies must demonstrate strong unit economics, clear paths to profitability, and sustainable competitive advantages to attract investment. This recalibration suggests a more discerning investment climate will persist as investors have learned valuable lessons about the risks of overlooking fundamental business quality in favor of market momentum and speculation.
Wow, that's a powerful statement. It really captures the shift in investor mindset, doesn't it? But what about specific sectors? Are there any that stand out in this new landscape?
Absolutely. The fintech sector provides a particularly interesting case study. Take Klarna, for example, as one of the pioneers in the buy now, pay later space. Klarna represents a hybrid between the venture-backed growth stories of yesteryear and the more mature businesses currently favored by the market. Their planned IPO will be a crucial test case for how the market values companies that combine high growth with improving unit economics.
And what about other fintech players? Any other notable potential IPOs on the horizon?
Well, Chime's potential IPO is definitely one to watch. With a discussed valuation range of $15 to $20 billion, It'll provide valuable insights into how the market prices digital-first financial services companies in a higher rate environment. The final valuation multiple assigned to Chime could establish important benchmarks for the entire fintech sector.
That's really interesting. It sounds like these individual companies could serve as bellwethers for entire sectors. But let's zoom out for a moment. How does this all fit into the broader market context?
Great question. While the S&P 500 has risen almost 70% from its 2022 lows, this rally has been notably concentrated in a small number of large-cap technology stocks. The broadening of market gains in late 2024 is particularly significant because it suggests increased investor appetite for market exposure beyond the dominant mega-cap names.
So it's not just about the IPO market in isolation, but how it fits into the overall market dynamics.
Exactly. And there's another nuanced aspect we need to consider: the relationship between private and public market valuations. Many companies that raised capital in 2021 did so at valuations that would be difficult to justify in today's market. This created what investment bankers call a valuation overhang, a situation where private market valuations need to adjust downward to align with public market expectations.
That sounds like it could create some challenges for companies looking to go public. How are investors and companies dealing with this valuation overhang?
Well, Samantha Lau at AllianceBernstein notes a more realistic attitude toward valuations among private investors. This shift in mindset is crucial for the IPO market's health. Companies and their investors need to accept that the exuberant valuations of 2021 are unlikely to return in the near term.
It sounds like we're in for an interesting year in the IPO market. What are some key metrics we should be watching to gauge the health and sustainability of this revival?
There are several key metrics to keep an eye on. First, we'll need to watch the performance of early 2025 IPOs, particularly in terms of aftermarket trading stability. Second, the pace of Fed rate cuts will influence both valuation metrics and investor risk appetite. And third, the success of private equity-backed IPOs could encourage more PE firms to accelerate their exit timelines.
Those are great points. It really highlights how interconnected all these factors are. Any final thoughts on what this all means for investors and the broader economy?
Well, while few market observers expect a return to the frenzied activity of 2021, there's growing confidence that IPO volumes will exceed the pre-2020 average of $38 billion. This more measured pace, combined with higher quality issuers, could actually create a healthier, more sustainable market for new issues. It's not about recreating the boom times, but about building a more stable, sustainable market. And
that's a great point to end on. It's not just about the numbers, but about creating a healthier ecosystem for both companies and investors.
Absolutely. And it's worth noting that this shift in the IPO market reflects broader changes in the economy and investor sentiment. We're seeing a move towards more sustainable business models, a greater emphasis on profitability over pure growth, and a more cautious approach to valuation. These are all positive developments that could lead to a more resilient financial system in the long run.
It's fascinating how a specific market trend like this can tell us so much about the broader economic landscape. Thanks for breaking it all down for us today.
My pleasure. And to our listeners, we hope this deep dive into the IPO market revival has given you some food for thought. Remember, while the markets may seem abstract, these trends have real-world impacts on businesses, jobs, and investment opportunities. Until next time, keep your ears to the ground and your mind open to the fascinating stories shaping our world.